Okay, it looks like it's 8 o'clock. I'm going to go ahead and get started. Good evening, everyone. My name is Alicia Jones. I am the Communications Chair for the National Coalition of 100 Black Women Delaware Chapter. Before we get started this evening, we have a couple housekeeping items to take care of. If you are entered into the room and you're not a panelist, please remain muted. This Zoom or what Ring Central is recorded. If you decide to have your video on, please make sure that you're not doing any distracting things or that could distract anybody. And also, if you have questions, to please put them in the chat. There will be an opportunity at the end of the presentation to answer some of the questions you may have that you put in the chat. If there's nothing else, if anybody doesn't have any questions, we will move forward to our president and our vice president to give further instructions. Thank you guys and enjoy this evening.
Good evening, everyone, and thank you so much for joining us. This is financial literacy. There is no way to get from day to day without finances, and there is no way to stay healthy without finances. When we lack finances, guess what? It impacts our health, our thoughts, our minds, our way of being. So we have the money coach tonight to give us the information that we need in order to make great decisions. As you all know, COVID has not been kind. This pandemic has been rough. We have struggled, especially as Black women. So tonight we are going to talk about the importance of really honing in to those benefits that we can take advantage of. Those that have a side hustle, guess what? We can get some money for that side hustle. Those that just want to stay corporate, guess what? We can find a way for you to make some money. So tonight, I'd ask that you pay attention, that you listen, that you learn, that you take notes, that you put your questions in the chat so that we can learn together. We are better when we learn together. So we are so excited that everyone has joined us. I am welcome, as well as with the money coach, with my able first vice president of programs, Sharice Brewington Carr, and then with our amazing other NCBW chapters. And I stand in awe, Dr. Sania Banks, the Manhattan chapter, and as well, soon to be Dr. We're just going to call it what it is. Paula Reiner, president from Bergen, Passaic. So we thank you all for partnering with us because this is great news. It's great information, and we look forward to everything that you're going to get from tonight. And we hope that you will take something away that you can share with your family, with your friends, that impacts a community, and changes the world. So without further ado, I'll pass the baton to my able-bodied NCBW chapter friend, Dr. Sania Banks.
Thank you so much. I appreciate that. What a warm welcome. And what an opportunity I have right now to share with my sisters in the coalition and all of you that are joining with us the unbelievable opportunity that we have to not only stand between the barriers and the boundaries that often show up for Black women and girls when it comes to their finances, but to be the educators and the advocators and those that are working towards our legislative friends and our legislative colleagues, helping them to make the right choices so that all that we are committed to for financial health can happen. As you all may know, the National Coalition of 100 Black Women has as one of its foremost and most important, I have to say, initiatives, a program that we call affectionately Sisternomics. Each chapter in the coalition is committed to doing no less than 4 programs a year dedicated to the financial health and literacy of not only its members, but the communities that we serve, support, and that hold us day to day. And so whether or not we're looking at the entrepreneurial avenue or pay equity as a value of our worth, whether we're considering our real estate and the impact on our neighborhoods when they're being gentrified and we can't live there, or whether we're helping our young daughters and their friends understand the basic business economics, we not only roll up our sleeves, but we lock arm in arm to ensure that we not only stand together on solid financial ground, but that we take a time like this and represent with multiple chapters that we are committed to the health of our members. So thank you for joining. On behalf of Manhattan chapter, we salute you, we ashe you, we clap for you, we snap for you, and we are just boldly happy and grateful for this opportunity to learn. Thank you.
Good evening. My name is Paula Madison Reiner, and I'm the president of the Bergen, Passaic, New Jersey chapter. And I welcome you here this evening on behalf of the Bergen, Passaic, New Jersey chapter, along with my sister presidents. And we're happy to partner once again with the money coach, Lynette Cox, to share this important information on economic empowerment this evening. I have the pleasure of introducing our guest speaker for the evening, and I'll briefly read her bio for you. Lynette Khalfani Cox, the money coach, is a personal finance expert, speaker, and author of 15 money management books, including the New York Times bestseller, Zero Debt, The Ultimate Guide to Financial Freedom. Lynette has been seen on more than 1,000 TV segments nationwide, including television appearances on Oprah, Dr. Phil, The Dr. Oz Show, Steve Harvey Show, Good Morning America, The Today Show, and many more. A former financial news journalist for the Wall Street Journal and CNBC, Lynette is the CEO of the MoneyCoach.net LLC, a financial education company that she runs with her husband and co-founder Earl Cox. She earned her bachelor's degree in English from the University of California, Irvine, and she holds a Master of Arts degree in broadcast journalism from the University of Southern California. She and her husband are the proud parents of 3 children, including 1 recent college graduate, 1 current college graduate, and 1 college-bound teenager. So she knows a lot about money management with 3 kids in college. To learn more about Lynette, you can visit her free advice site, askthemoneycoach.com. Make sure you write that down, but we'll provide that later on this evening. And check out her video-based financial courses at Money Coach University, or connect with her on social media. So we are excited to have Lynette with us this evening, and she's going to show us where the money resides, where the money resides. So without further ado, I'd like to welcome our guest speaker for the evening, Ms. Lynette Khalfani Cox. Thank you.
Well, thank you so much for that introduction, Paula. I'm super appreciative of the warm welcome, and it's great to be back. This is yet another presentation, and so the NCBW chapters, I really want to thank you, Delaware, Manhattan, Bergen, Passaic. Bergen, Passaic, my old stomping grounds there in New Jersey in particular. Yes, Paula, I'm giving you a shout out. I'm super happy to bring you guys this information tonight because if I do say so myself, it's great stuff that's going to help you to be able to put some cash in your pocket. You know, obviously we're in the middle of a pandemic right now. And yes, COVID has not been kind to Black women in particular when it comes to our labor market participation. Lots of layoffs, lots of downsizing, folks working in industries that have been particularly hard hit. But I also know that a lot of sisters are about having their own businesses. They're about building a brand. They're also about looking for ways that they can expand if they're already entrepreneurs. Certainly I've had my company for 18 years. Where's the wood for me to knock on? 18 years and going. And so I really jumped at the chance when Sharice reached out to me to talk to you guys about the American Rescue Plan and what this act means for us in terms of our business, our brands, and ultimately our bottom line. Because really, even if you don't already own a business, you might want to think about having a side hustle, doing some kind of part-time gig. You might want to think about launching an enterprise, taking your skill set and utilizing it. Because right now, Uncle Sam is on your side. the government is throwing money at small businesses and even at nonprofits and other entities. And I'm going to explain to you in the course of this presentation over the next 35 minutes I have here exactly how you can get your piece of the pie. So without further ado, let me go ahead and launch into the formal part of this presentation. And certainly, as Paula mentioned, we're going to take questions at the end. And I also want you to know that I've created a resource guide for you. It's kind of a mini synopsis of what I'm going to describe to you in this session, but it also gives you some resources and tools and gives you the information that I'm going to share with you. So I want you to really be engaged, pay attention to the conversation, because this is going to be a conversation ultimately. And then don't worry if you haven't taken everything down from a notes perspective, etc. It's not necessary, because we're going to give you this information. The attendees are going to later be given a synopsis and highlights of this information. Okay, so let's all enjoy this together. And as mentioned, if you have comments, please do feel free to drop them in the chat box, and then we're going to take your questions the last 10 or 15 minutes or so of this presentation. Okay, so again, without further ado, let me go ahead and share my screen here, and we will launch right in. You guys are, I assume, seeing my screen here. I don't know if you're seeing still, I hope you are still seeing a little bit of me here in the side window, but certainly this is all about you being able to leverage the many, many financial benefits for yourself and your business in 2021 via the American Rescue Plan. So let's talk about how you're going to get yours. The first thing I really want you to understand is that even though a lot of you knew that this rescue plan gave, stimulus checks, those so-called stimulus checks, we'll call them survival checks, gave unemployment benefits, gave tax credits for parents, etc. Those are all obviously great financial benefits. On the personal side, though, what we're going to focus on today in this session is about the three most salient, most important business benefits that I think that you can benefit from. So first is about the PPP loans. You might have heard about this. Hundreds of billions of dollars in funding made available to small business owners, nonprofits, and others. And I'm going to talk you through that. The majority of this presentation is going to be spent on that, but also want to highlight two other major areas where you can financially benefit, and that's in the form of tax credits, where you can get some money right now. You don't have to wait to file your taxes, and the EIDL program, or the Economic Injury Disaster Loan Program, and the attendant grants that go along with that. So what is a PPP loan? First of all, PPP stands for the Paycheck Protection Program. And even though this is called a loan, I really want you to think about it more like a grant, because it's a forgivable loan. It is so easy to qualify for. You're going to be shocked when I show you how ridiculously easy it is to qualify for. You get these loans through banks, through credit unions, through community financial institutions, or through fintech companies, whether it's like a PayPal, etc. Even though the SBA is federally insuring these loans, you don't apply for the loans through the SBA. You have to go through a specific financial institution, the so-called approved lenders. And here's the catch for right now. You only got about a month's more worth of time to apply. The deadline, it's a new deadline that was established now, is May 31st, 2021. So you might have heard that the March 31st deadline came and went. And yes, that deadline did come, but they extended it another 2 months. So if somebody says to you, oh, I can't get a PPP loan right now because the deadline's passed, you tell them, no, the money coach told me there's a new deadline. It's May 31st. And guess what else? Because some institutions stopped taking loans applications even before the initial deadline because it needs time on the processing front, the American Rescue Plan added another 30 days, even past May 31st to the end of June, so that the SBA can ultimately handle its side of it on the back end and processing and approving of loans. So you'll be able to apply up until May 31st. And I don't recommend that you wait until the last minute, but certainly if it's in that last week or so, your institution that takes your application will still be able to hand it over to the SBA and make sure that they give it the stamp of approval, okay? So who qualifies for these? Well, a ton of people qualify. They are literally, like I said, throwing the money at people. They've expanded the guidelines ever since the PPP loan program was initiated in March 2020 with the implementation of the CARES Act. Now it's been expanded, revised, changed, upgraded, and improved several times since then. And now as we stand here in 2021, these are the folks who qualify and who are eligible. Anybody basically with any kind of business can get a PPP loan. Now, don't think about it that you have to be incorporated or you have to have an LLC or you have to be an S Corp, which is the form of business that my company is. No, you can be a sole proprietor. You can just have a part-time gig. You can get a 1099 from someone. You can have a side hustle and you can qualify for a PPP loan. So as an example, just to show you here, because sometimes people are like, well, what does that mean in practical terms? Well, some of the folks who can get a PPP loan are the names and the professions that you see here. You might be a doctor or an engineer, or you might be a taxi cab driver or somebody who, you know, does a ride hailing service like Uber or Lyft. You might be a consultant or an advisor of some kind. Maybe you're a virtual assistant or you're a performer. Maybe you own a retail store. Again, all of these types of folks in these roles can get a PPP loan. In fact, on my website, on askthemoneycoach.com, my free financial advice site, I created an article and I identified 150 types of jobs and professions where people can get a PPP loan. So who else can get a PPP loan? You might have seen, let me go back one quick second here, just because I want to make sure that you saw this where it said United States residents. That wasn't an accident that I put that there, where it said United States residents. They want you to live in the country, but I don't want you to think that only people who are permanent residents here in America can get that. Because no, maybe you came from Jamaica, sis, or maybe you have a spouse from the Caribbean or elsewhere. Well, if you or your spouse who's also an entrepreneur working in the business with you, or you are aspiring to start a business together, there's some ways in which you can get a PPP loan as well. So you might be a person who has what's called an ITIN. That's an individual tax ID number. Basically, that's a tax payroll processing number. And it's given out to folks who can't, for whatever reason, get a traditional Social Security number. So some non-residents, certain quote unquote resident aliens get it. Their spouses and kids can get it. It's designed though to help you to do the things that you need to function in a tax-paying, society here in America, and for other purposes, whether that's work, etc., school, and so forth. But you'll notice that with an ITIN, it always has a 9 at the start of that number. And it's formatted, it has the same 9 digits like with a Social Security number. So if you happen to know somebody who is not, quote unquote, maybe an American citizen, but who is a legal non-resident or quote unquote resident alien, that person also can get a PPP loan. Now, that doesn't mean that they don't have to still live here in America. Yes, they still have to be a resident here in the country and they have to meet all the PPP loan requirements. But basically, they're going to use that ITIN on their loan application and on the loan forgiveness application on the back end when they apply for loan forgiveness. Now, who else qualifies? A lot of institutions, and I know that some of you are running some of these institutions. Some of you have nonprofits because you're givers. You want to help out in the community. You might have a educational institution in your community. You might have a faith-based organization. Well, members of clergy are eligible for the PPP loan program. Tribal businesses and veteran groups, even media entities now can access the PPP loan program. Folks in farming and in ranching and agricultural production, all of those are eligible entities for the PPP loan program. And then to put a bow around it, other types of borrowers. Now, some of you live in co-ops. I know you're on the East Coast in New York, New Jersey, Delaware, etc. Some of you might be living in a housing co-op, and that cooperative might be in need of funds. Maybe you had some folks who hadn't paid, their dues and or fees and whatnot. And so maybe there's some things in need of repair or whatever. But I just want you to understand that there's a gamut of institutions. Some that are even owned by government entities, hospitals, for example. So as you can see, there's a wide swath of entities, individuals, and institutions that can qualify for a PPP loan. Mainly, I want you to understand that if you do any kind of work whatsoever where you get a 1099, that's a miscellaneous income form. If you have a side hustle, a part-time job, a sole proprietor, an LLC, all of that makes you qualified. You might be doing hair. You might be have a tutoring business. You might be a business consultant. You might be an independent salesperson. Yes, you can get funding through the forgivable loan program known as the Paycheck Protection Program. Now, let's talk about how much you can get, because I know this is like one of the main questions people want to know. Okay, Lynette, what's the bottom line here on the money side? Well, right now, there's a $2 million maximum. Some people are getting their second loan right now on that $2 million front. They originally got a PPP loan in 2020, and again, now they're letting you get another one for 2021. So in a nutshell, though, you have to understand that the exact amount of your loan is going to be based on whatever your monthly payroll is. So it's 2.5 times your monthly payroll. But those of you who have a small business or do work in the hospitality sector, maybe you have some kind of food services business. It could be a food truck. It could be a deli. It could be a bar, etc. Anything in hotels, accommodations, that kind of thing, you can actually get a loan that's 3.5 times your monthly payroll. And get this, this is one of the best changes that they just made recently to the PPP loan program. It happened in late March and it kicked in April. If you file a Schedule C as a self-employed person, you can use your gross income to qualify, not the net income, the gross. Well, what's the point of that? It helps you to qualify for a much bigger PPP loan, because we all know people who are in business, we try to take every deduction we deduct from our gross income, our expenses for the year, and then we produce a net income at the end. Well, you don't even have to take out your costs or anything like that. They will allow you to use your gross income and to average that out over the course of a year to figure out what your monthly income is, and then make your loan size based on that, 2.5 times, again, your monthly income. So again, quick example here for you with 3 different income levels to show you how much you can get. So if you made $30,000 from your side hustle or your full-time enterprise in 2020, that means you made an average of $2,500 a month. Well, if you multiply that $2,500 times 2.5, what does that give you? $6,250. That would be your maximum PPP loan amount. If you double that, if you made 60 grand a year, that works out to $5,000 per month, which gives you a total of a $12,500 forgivable PPP loan. Did you hit the 6 figures, sister? Well, that works out to be $100,000 a year, works out to be an average of $8,300 $33 a month. And again, if you multiply that times 2.5 times, which gives you your maximum loan amount, you will get a PPP loan for $20,833, okay? Now, how do you have to use the money? Well, they're very clear and specific on what the funds are for and how they can be expended, how they can be utilized. You have to spend at least 60% on payroll. But guess what? That's not too hard, is it? Pay yourself. Pay yourself and pay your employees. For those of you who are sole proprietors, maybe you have a mom and pop business. If you have a spouse that's working in business with you, for example, a so-called mom and pop business, just a partner who's working with you, you can pay yourself and your spouse with the PPP loan funds. You have to pick a loan period, what's called a covered loan period. It's anywhere from 8 weeks on the short end to 24 weeks on the long end. It's your choice. You can choose 8, you can choose 10, 12, 24 weeks. But in effect, 60% must be spent on payroll. And the details, the sort of fine print of the program are that you have to count the cash portion first, and you can only get up to $100,000 in, well, the employee can only get a loan that is based on $100,000 cash to that employee, either yourself or to others who are bona fide employees of your business. You cannot claim as payroll somebody else who you 1099. It has to be somebody who's considered a quote unquote employee by the legal standard of them being an actual employee under your control. After that $100,000 in cash, though, you can get a loan that is higher on the basis of all the benefits that you pay to an employee, including the benefits that you pay to yourself. So anything on the healthcare front, disability, life insurance, anything, if you make contributions to a retirement plan, yes, even if you're funding your own retirement plan, just like I am, I fund a solo 401k for myself and my husband. We have a solo 401k. That counts in our PPP loan calculation. Paid vacation time, that counts. Sick leave, that counts. And yes, even the taxes that you pay as the employer on state and local, for state and local taxes that are paid on employee pay. You roll all of that up and that gives you your payroll costs. If you're not doing all of that extra stuff for the benefit side, you can just literally just use the cash amount and figure out, okay, 60% I got to spend on payroll, okay? The other 40% can be used on non-payroll items. And again, the SBA guidelines are very clear about what those are. It's mortgage interest and rent, utilities, what they're now calling supplier costs and operational expenses. So anything on the tech front, they realize that because of COVID, a lot of us have had to work from home. We've had to upgrade our technology infrastructure. We've had to get additional software to be able to do business virtually and remotely. So anything on that side, anything related to payroll or HR, the accounting costs that you bear, that's all eligible in terms of costs that you can spend funds on with your PPP loan money. Additionally, they added some categories around PPE, personal protective equipment. If you had to get gloves and masks and shield, if you had to outfit anything, if you have a store and you put up a barrier, for example, if you expanded your space to create more social distancing, if you have a restaurant and maybe you did something big and built a drive-through or something like that, again, to accommodate from a health and safety standpoint, COVID-19, to acknowledge that reality, those costs are covered under the PPP loan program as eligible expenses too. And then because we had this big racial reckoning, you'll recall, in 2020 in the aftermath of the murder of George Floyd, because of that uprising, there was damage to folks' property at various points all across the country, massive protests. Well, the powers that be in Congress decided that quote unquote vandalism and looting that occurred in 2020 is also something, if you had to pay for any kind of property damage and it wasn't insured or reimbursed at any level for you, you can spend PPP loan funds on that as well, okay? So now, what about the loan terms? Well, again, I've already told you that if you spend the money on qualified expenses, payroll, and ladies, it's not hard to pay yourself, is it? Payroll and those other operational and business costs, the loan you get will be 100% forgiven. In fact, any loan that is under $150,000 in size has a streamlined one-pager, easy loan forgiveness. You don't have to give a ton of paperwork. You don't have to, show all kind of receipts. You merely have to attest, yes, I conformed with the law and I met the guidelines, and your loan will be forgiven and thus converted into what I'm calling a grant. So again, 100% loan forgiveness is possible with this, and I cannot stress how super important that can be. Now, if any amount is not forgiven, you have a super low interest rate of just 1% and a term that's 5 years for you to be able to pay it off. They also let you pick and choose, and I think this is an important criteria within the Paycheck Protection Program in 2021. If your income in 2020 actually went up and you did better, you remember we had a phase where there was a big push to buy Black, and a lot of vendors and merchants and small business owners benefited from that and had actually quite a banner year in 2020. Well, you can use your revenue figures from either 2019 or 2020, whichever one is more advantageous to you. So obviously you'd want to pick the year of income that was greatest in order to get the highest amount in your PPP loan. Additionally, if you do take out a PPP loan and you do have to pay anything back, your loan payments are automatically deferred for 10 months until after the end of your covered loan period. And remember, that covered loan period I referenced, you decide what that is, a minimum of 8 weeks and a maximum of 24 weeks, okay? Now, what else is required in order for you to get your hands on this money? Because I know some of you are doing the math and thinking, okay, well, yeah, I made, $60,000 last year, and maybe I can go ahead and get this free money, apply for this PPP loan. Well, you have to have been in business from February 15th, 2020 onward. You have to have actually, of course, generated revenue. Even if you had a business loss, that's okay. Some people were worried before, like, I didn't actually, did not, break even, or I had a loss. That's okay. Remember, I even told you that you can use your gross income even, okay? You don't have to worry about the net figures. You have to fill out an application and, yes, provide documentation to show, okay, this was the income amount that I earned or that my employees earned. And you can prove that income in a lot of different ways. You might have 1099s, you might have payroll processing forms if you use services like ADP and others. You can also use just bank statements. If you can show regularly that you deposited your payments that you received into a bank account, they will accept that as well. So again, just to highlight, some of the reasons why I say it is super easy to get a PPP loan in this current environment. They're making it as easy as you will ever find a federal or a private loan. There's no credit check. You don't have to give a guarantee. You don't have to put up any collateral. There's no fee, no application fee to get it. You don't have to give up your tax returns. You can provide your tax returns if you want to say, here, this is the amount, see my Schedule C. But you can also show income in other ways, as I just alluded to before. So again, these are really super lenient criteria. But guess what? It gets even better. I mentioned no credit check. So if you got bad credit, that's okay. Don't let that rule you out. Did you file for bankruptcy? This is something new. This literally just happened this month. In April 2021, the SBA quietly kind of updated the guidelines around this. And on the website for the SBA, which is sba.gov, they have a set of FAQs about eligibility and the parameters for the PPP loan program. bottom line, they basically said, look, you cannot get a PPP loan if you are presently involved in a bankruptcy. But oh, did you have a bankruptcy, personal or business, and it's either been discharged already or dismissed, something that's already sort of, done. If you did a Chapter 7 and it's already done and over with, if you have a Chapter 11 or 13, if you have something that's a court-confirmed reorganization plan, oh, you're qualified. You can get a PPP loan. So right now, listen what I'm saying, ladies, a lot of businesses, larger businesses, because we know, again, the pandemic has been treacherous for a lot of business who they went out of business, right? So there's right now, because of this one change alone, a rush for big businesses, mid-size, franchises, et cetera, to go try to get that PPP loan money. So I'm encouraging you to do the same. Even if you have defaulted or delinquent student loans, and now you can usually never have defaulted loans and get anything, okay? Felony convictions are even okay, with the exception of anything financial related. It can't be something for bribery or embezzlement, fraud, that kind of thing. And you can't be currently incarcerated or living outside the US. So again, I'm gonna wrap on this side of it and say, my main takeaways is that the American Rescue Plan just builds and expands upon the initial CARES Act that was passed in March 2020 and made it sweeter than ever. You can write off the expenses themselves. Listen to me what I'm saying here. You could get, for example, a $20,000 PPP loan, use that loan to pay yourself and your employees and all of your business expenses, utilities, rent, operational costs, and then you can actually deduct the money. You can deduct those same expenses, even though the expenses were not paid for out of your pocket. That's a rare double dipping feature that's almost never found in the tax code. The government is basically paying you. They want to keep small business afloat. If your spouse works in your business, employees, etc., you can get this funding, and it gets written off as long as you use the money for the approved appropriate expenses, okay? Remember that deadline, May 31st. All right, so let's jam through some of this, talking about the tax credit side of things, because these are massive and especially relevant for those of you who don't yet have your own small business. So what are the two tax credits I want to highlight? Well, one is something called the Employee Retention Credit. The other one is the FFCRA tax credit, and that stands for the Families First Coronavirus Response Act. That was passed in 2020, but again, now with the American Rescue Plan, they've expanded upon that and extended that particular credit until September 30th, 2021. And even the FFCRA, that one expanded on the Family and Medical Leave Act, and I'll explain to you how. So again, who qualifies? Listen, if you have a small business, if you're part-time, you got a startup even, we're gonna get to that, 1099 workers, you're all going to be eligible to take these tax credits. Even those of you who are operating or running nonprofits or faith-based organizations, membership organizations, etc., all of you can qualify for this tax credit. And here's what it is. It's an enormous payroll tax credit. Listen to this. The tax credit amounts to $28,000 per employee that the government will give you back based on wages that you pay to the employee. So if you had an employee who made, for example, $40,000 in 2020, I'm sorry, let's talk about 2021 now for 2021, and you paid that employee, even yourself as the employee, the government is gonna write you a check for $28,000. So what the net effect is like, you paid that employee really $12,000. And I'm gonna walk you through sort of how this works. Again, because the American Rescue Plan builds on prior legislation, I want you to understand the evolution very quickly here and how this employee retention credit applies to different time periods based on different laws. So with the CARES Act, that one was applicable for wages that were paid in 2020, from March 2020 through December 2020. And again, I know that some of you have not yet done your taxes yet for 2020 because there's an extension for being able to file your taxes because of COVID. And even if you apply for a 6-month extension, you can put off doing your 2020 taxes until as late as October 2021, I'm sorry. So after the CARES Act, then came the Consolidated Appropriations Act of 2021. And that one references wages that are paid the first half of this year. Then finally, the American Rescue Plan gives tax credits based on wages paid the second half of 2021. So in a nutshell, and I know this might seem like a lot of numbers, but just stay with me here. I'm going to do a quick breakdown and explain this to you. In order to get these juicy tax credits, you have to pass either a gross receipts test or a so-called suspended operations test. The gross receipts test basically just means, did your income go down by 20% or more? If so, then you're going to be qualified. They're going to look at your 2021 revenue versus what you made in 2020. Or versus, they'll look at your 2020 revenue versus what you made in 2019. For 2020, again, if you have not yet done your taxes, to get a tax credit, the employee retention tax credit, you have to have shown a 50% drop. So that's a harder one to accomplish, but certainly for some people, again, because of the ravages of COVID, that might have happened to you. Your business might have suffered a 50% decline in revenues. Now, even if you didn't meet these numbers, the gross receipts test, you can probably still qualify for the employee retention credit on the basis of the suspended operations test, because you can do either one. You don't have to do both. Now, basically, almost every business in America is going to qualify on the suspended operations guideline, because it basically just refers to any business that was suspended in terms of operations in any calendar quarter due to COVID, because there was some kind of a government order, some kind of a shutdown, some kind of a suspension, some kind of recommendation that people not open. So again, very easy to qualify for. For 2020, for those of you who have not yet filed, the bottom line is that that tax credit amount is $5,000 per employee. The reason it works out to be $5,000 per employee is because they capped it in 2020 for the entire year, saying you can get a tax credit on wages that you paid per worker up to $10,000 in wages. The tax credit amount is half of that, or 50%. So that's why you get the 50% of 10,000, of course, is $5,000. That's why it's a $5,000 maximum. How do you get it? Well, you can get an immediate tax refund from the IRS just by filing Form 7200. If you don't want to do it that way, and you just do it through your normal wage reporting, you can just fill out IRS Form 941. 2021, though, is on fire with these employee tax credits, because this is when they really went big. You can better believe that I'm going to be claiming all of this tax for all of 2021 for myself and my husband, okay? I will be getting a tax credit of at least $56,000. Money directly back. Remember, this is a refundable tax credit from the government. So here's why it works out that way. Every employee on the payroll of a company that is earning as much as $10,000 in the quarter, and I earn $10,000 per quarter. Again, do the math, ladies. That just means that you're going to be earning $40,000 over the course of a year, right? So if you're earning $10,000 in a quarter, about $3,333, per month, right? Very doable for a lot of people. Then you get a tax credit of 70% of wages paid. Remember, it was 50% for 2020. Now it's 70%. So 70% of $10,000 per quarter is $7,000 per quarter. And here's the good news. This American Rescue Plan, again, took us all the way through the end of 2021. So you can get a tax credit total of $28,000 per employee. The government is basically giving you money just to keep folks working, okay? It does not get much better than that. Now, I mentioned, of course, that some of you who have not yet even started a business, you might be like, well, yeah, I heard you say earlier, Lynette, that people need to have been in business February 15th, 2020. Well, guess what? There's something for you here as well, because this employee retention credit includes a very special provision called the Recovery Startup Business Provision, meaning that you can get some money too. Now, if you started a business, a side hustle, a 1099, remember, any kind of enterprise after February 15th, 2020, and your business did not make at least $1 million, and I assume that it probably didn't, but if you did, go ahead, sister. Well, you can also get this same employee retention credit. And again, I hope I'm driving home the message here, because you can be the employee that we're talking about. You are the owner, operator, employee of your own business. Now, they limit this one to $50,000 total per quarter. So you might be like, okay, well, I'm not paying that many people. Again, if it's just you yourself, it's going to be $7,000 per quarter. So for the course of a year, that would be $28,000 total, but only for this specific provision. For those of you who are starting a business, if you have not yet started it, you can get this employee retention credit for the second half of 2021, the last 2 quarters of the year. So if you're a solo enterprise, you can get as much as $7,000 in for the third quarter of 2021, and another $7,000 refundable tax credit to you for the fourth quarter. So think about that for those of you who are considering starting a business. Okay, I'm gonna take the last 3 minutes here and push through about the tax credit and the EIDL program, because I know some of you wanna know about EIDLs as well. On the FFCRA tax front, this is a credit for sick leave. Bottom line, if you're paying somebody or yourself to get a vaccine, take a day off, we'll still pay you, or recover from the vaccination process. Because some people, felt a little woozy there for a day or two or longer. Well, you can get a tax credit up to $511 per day on those wages paid, whatever you paid out, up to a maximum of $5,110. You can get a tax credit for paid family leave. This one is up to $200 per day and a maximum of $10,000. So here, I'm telling you that this is the year, if you ever wanted to really get with your accountant and to make sure that you're dotting the I's and crossing the T's, please do it in 2021. You can get so much money to expand, grow, or keep your business afloat. And in fact, if you've already filed a 2020 tax return and you're a small business enterprise and you say, I didn't take advantage of any of these tax credits, go back now and amend that tax return. It'll be worth it for you to do so, okay? Let's talk a little bit about the EIDL program. You guys know, I hope, that each one of these could be a section in and of itself. The Ppp loan program, the taxes, and the economic injury disaster loans. So I'm trying to pack in this information to make sure that you can get the benefits that are due to you, and that you can thrive when it comes to you, your brand, and your business. So the EIDL program is, again, a federally insured loan through the SBA for folks who suffered as a result of the COVID pandemic. The loan amount is capped at $500,000. And I'm gonna tell you right now, it's harder to get than the PPP loan program. But again, pretty much everybody can qualify if you can meet a couple of hurdles, which I'll outline, okay? You get to use the money for a variety of expenses. They make it quite flexible and generous. You can pay yourself and your employees, you can pay rent or utilities, you can use it on operating expenses, you can just use it for working capital. It's a great loan program. I've taken advantage of and will continue to take advantage of all three of these: PPP loan, tax credits, and EIDL. And again, I'm going to recommend that you do the same. So On the idle front, you don't have to put up any collateral if your loan is less than $25,000. If it's more than $25,000, the SBA does file what's called a UCC-1 filing. Don't worry about it. It's nothing hard or there's no problem. It's just an indication, really, that you have a loan, and they're just mostly, you're not having to turn over any assets or anything to them, but I did want you to know that that UCC-1 filing is made. If you have a loan greater than $200,000, collateral is required. Now, the loan forgiveness on this is zilch. This is not like the PPP loan. You have to pay this money back. Frankly, I think it's still a great deal, because if you look at business lending and how hard it is in terms of the cost of capital, it's hard to get, business loans these days. The rate is 3.75% for small businesses and 2.75% for nonprofits. It's a 30-year loan, and the payments are automatically deferred. So if you take out a loan right now and idle in 2021, the loan payments don't start until 18 months later. But you do have to pass a credit check, and that's the one thing that has tripped up a lot of people. Now, on the grant front, an idle grant is tied to this economic injury disaster loan program. The grant is also called an emergency idle advance, because they're giving you the money up front, as much as $10,000. They've appropriated billions and billions of dollars. I know you heard about the grants. There was a rush on the grants and the money went away, but trust me, they've replenished it on the funding front. I'm showing you the deadline of December 31st, but understand, ladies, you don't need to be waiting around. Don't procrastinate. This idle grant is important for sustaining your business, especially those of you who are going to qualify if you're in a low income area, or if you've had a 30% drop in your revenue over any 8-week period. That's the main thing in order to qualify. So I'm going to suggest that you apply for that grant, even if you don't want the loan, because it's by applying for the grant, even if you get denied and turned down for the loan, you still get to keep the grant. So that's an excellent way to get some extra cash. And the loan itself, in my opinion, is a great offering to help businesses sustain themselves and thrive in this economic period. So with that, I am going to wrap it up there. I know I went over a little bit here. I hope you'll hang with me, because I'm going to take your questions as long as you guys want to go. But certainly, if you have questions right now, is the time to ask the money coach. I want you guys to feel free to take a pic, if you want, of this slide to take down my contact information. But I will tell you that in the document that is going to be provided to each and every one of you as attendees, there is also the same contact information. So don't feel rushed, or don't feel like, oh, I didn't capture something there. What was her email address? It's info@askthemoneycoach.com. I'm on social and all of that, but you'll get the same information shortly. And with that, I'm going to stop sharing my screen and let the folks who have been so generous and gracious to curate questions and to help with the moderation jump back in and tell me where we're starting here.
Good evening, Coalition Sisters, and to our special speaker, Lynette. You were phenomenal. We have certainly gleaned so much from you tonight. We do have our first question. Our first question is, what do your net earnings have to consist of? What is the amount in order to get a loan and forgiveness? That was our first question for tonight.
Okay, so the answer to that question is, you don't have to have any net earnings. Remember, a business might have a net loss, right? So let's say you actually grossed, $30,000. Again, I gave you that example. But let's say that you had expenses of $35,000 for the year. Well, you had a $5,000 net loss. So ordinarily, you wouldn't be qualified for a loan, right? Under those terms and circumstances. But that's one of the great things that they just did with the Ppp Loan program. They said, don't worry about all the expenses that you netted out and you deducted. We'll let you use the gross amount. How much revenue did you actually take in? So believe it or not, I've heard of people getting a Ppp loan that's like $500. Now, what that tells me is that they're monthly average was about $200. So they made $2,400 in a year. Remember, it's 2.5 times whatever your average monthly payroll is. So if you literally made $200 a month, they're gonna say 200 times 2.5, that's $500. That's $500 free dollars for the PPP loan program. So, you know, if you have a more robust, vigorous, active small business or part-time enterprise, a full-time, a side hustle, whatever, and you're making more, it's all about what revenues did you generate. Then let's calculate, take the total for the year and divide it by 12. That's it. You're gonna see that's the average monthly number. And once you know your average monthly number, just multiply it by 2.5, that's your PPP loan amount.
Excellent. Thank you so very much. Our next question is, how long does a person have to use their PPP loan?
So you have anywhere from 8 weeks to a maximum of 24 weeks to use your PPP loan in 2021. Originally, back in 2020, it was a shorter period. It was just 8 weeks, but they made it more flexible. They, especially for some restaurants, they were like, look, we haven't even got a chance to reopen yet. We can't spend all the money yet. So bottom line, you have a choice. You get to decide your covered loan period. And that's what they're calling it, anywhere from 8 to 24 weeks.
Thank you. Thank you. Our next question comes from Monica Shockley Porter. If you are a federal employee with a side job, can you still qualify?
Monica, thank you for the question. You said with a side job. I don't know if you meant a W-2 employee job. That's not the kind of enterprise that we're talking about. If you work part-time for another company or another organization, and I understand, of course, the government is not a company, certainly it's an entity or an organization, but if you work in another role, if that's what you mean, part-time, and you're doing it for yourself, you don't have a boss or an entity that you're working for, it's a part-time enterprise, then yes, your earnings from that side job, that side hustle, so to speak, is what you would use to qualify you for the PPP loan, not the W-2 wages that you get from, you know, your government salary.
All right. Thank you so much.
And by the way, just let me put one little asterisk next to the W-2 question, because I mentioned that my company, the moneycoach.net LLC, is an S Corp for federal income tax purposes. What that means is that I am both owner and employee. So I get paid in 2 ways through my company. I pay myself a reasonable salary, and that payment is via W-2. Additionally, I pay myself dividend income. So the W-2 salary is what is used in that case for me as the employee, but I'm the owner of the business, to calculate my PPP loan amount. So in that case, the W-2 would be applicable.
All right, thank you. Are there any special loans for Black women or minority-owned businesses?
So yes, I mean, right now, if you look at a wealth of resources that are out there, from corporate sites to government agencies to community-based resources, some of them are specifically earmarking funding for Black-owned businesses, for female-led businesses, etc. So I would encourage you to just really, it's kind of like do a Google search. It's not, these programs specifically that I've outlined are not specifically or exclusively for Black-owned businesses, although in the American Rescue Plan, and frankly, even in the original CARES Act, there were carve-outs that were done. It didn't work really as well as hoped and anticipated that first round. Obviously, there was a big rush of big companies that kind of ran in there and got the PPP loans. But there were funds designated specifically for minority-owned businesses, et cetera, women-owned businesses, veteran-owned businesses, et cetera. But in general, really anybody would be able to apply for and get those PPP loans, those loans or the grants, as well as the tax credits that I referenced.
All right, thank you so very much. I'm going to ask you one question. You've answered it, but I want you to reiterate it for the coalition sisters that are on this line. Do you have to be an adult to qualify for the loan program? You know, we've got a lot of young bosses out there right now. So do any of our young people qualify to get the PPP loan if they are working their own business?
That's a great question. You do have to be an adult, and I am not going to say 100% because I don't know, and I'm not going to lie and say I know, but I'm pretty sure. I think you have to be 18 or older. I'll double check and see if it's 18 or 21. But to my knowledge, yeah, because you're attesting and signing, right, that if you know that you'll pay the money back if you don't use it for the right purposes, etc. And even to be able to sign and to authorize a loan instrument, I'm pretty sure it's 18. I don't know if somebody else can jump in here if anybody else knows, but I have not heard of any teens under the age of 18 getting it. But if they do, then I'm gonna be real happy to find out about that. And I might be like telling Alexis to apply for something. You know?
All right, all right.
My 15-year-old, she's starting business this year.
Excellent.
And
Excellent.
thank you, Sharice, for the support. I know you bought some of her product.
I did do that. I think that's the end of our question and answer. And if there are more questions, as we said, Lynette is willing to answer those offline and get information back, and we can post it to our respective websites. I'm Sharice Brewington Carr, serving as First Vice President for the Delaware chapter, and just want to say thank you for a wonderful presentation. And I want to talk a bit about the path forward. I think we've heard some incredible information tonight, and I just think we need to keep asking questions, ladies. I think we really need to look at what's next, understand these new rescue plans. I heard today that there's a new iteration that the president is thinking about in the next stimulus bill. So Lynette or whomever will be talking to us about, you know, what's next and what to do and how to do it and what have you, and increasing our toolbox, so to speak, around these items. For us and for, as Sonia said earlier, that the Sisternomics process and part of our programming and what we do specifically is looking at economic survival, economic parity. And so we have to have our toolbox be sharpened on an ongoing basis. And that's what happened tonight. We'll keep doing that. We keep asking you guys to keep asking questions. You will also receive after this, as a thank you from all of us, the wonderful resource list. I understand it's 3 pages long of wonderful resources and content and information that Lynette has put together for us as a thank you for participating in this program tonight. I think we'll also be looking at ways to upload this presentation. We recorded it tonight so that you will have access to this as well. And for NCBW Delaware chapter, as well as for the other chapters as well, I know that there are upcoming programs that they have in their economic series. For us, what we have is that on June the 8th, we are going to have another iteration of Sisternomics in looking at local business leaders, along with our local Department of Labor Cabinet Secretary, who is a Black woman, Carol Hubbard, will be joining us at 7:30 p.m. You'll all be invited to participate. We'll send that information out to you. And I think that's it. I'm going to hand it off to the Madam Presidents to give remarks. And I think we start with Sonia, Paula, and then end up with Melanie. Thank you.
Well, thank you so much. This has been an amazing evening. I was all the time copying print screen and sending it to my entrepreneur friends and saying, you can do this, and just get them sparking and talking and quoting you, Lynette. So thank you for that gift of liberation, financial liberation. I was really moved by the grants and the loans and the fact that there's so many opportunities. Even people that talk about wanting to start businesses, we were like, you can still get in. So a lot of my hands were moving because I wanted to do it just in time. So we thank you for this gift of education. And again, yes, Manhattan Chapter's next program is May 20th, where we're really looking at how can we get all things financial, from our girls to our sisters in line. So we're looking at how COVID and how even curiosity and power has impacted our understanding of money. So we do have a sisternomic survey, and we'll make sure that all of the chapters get access to that, because we're trying to figure out how sisters made it. Thank you for giving us hope and direction and a way to apply all of our gifts. We appreciate that.
My pleasure.
Thank you. And on behalf of the Bergen Passaic chapter, we so thank you for this presentation, Lynette, and thank you to our sisters in Delaware and Manhattan for this partnership. I took down copious notes as well. You know, it was interesting. You started off saying it's not a stimulus check, but a survival check. And I'm sure we can do an entire presentation on that alone. You know, this whole stimulus check, this stimmies as they call them, we really need to educate our community on better financial awareness. And you did a great job on this tonight. So you got the wheels turning on our next program just around the stimulus checks and survival checks as a whole.
Can I say one thing?
Sure.
I was just going to say, part of why I'm so passionate about this area for small business owners, entrepreneurs, and aspiring business owners is because a lot of folks will be thinking about that stimulus check as a survival check, or, you know, basically they got us like groveling and scratching and trying to get crumbs. Yes. And really, it's all written in the tax code. And, you know, my husband always says that Uncle Sam has a baby in the cradle, and it's called small business. And Uncle Sam will nurture and take care of that baby until it grows up, until it becomes a mid-sized business, till it becomes a huge entity, a publicly traded company. If you own a business, the government will underwrite so much of that, and frankly, even underwrite part of your lifestyle and economically give you so much. So I'm sharing with you, ladies, because I personally have received at least $250,000 worth of benefits over the last year by taking advantage of everything that the government is going to throw. I'm going to accept it. And it's only through my business owner status that I've been able to tap into those benefits. So no, I wasn't worried about getting a stimulus check. I'm not saying that there's anything wrong with that, but I'm just telling people to really look where the big money is, and the big money is with business.
Well, thank you. Thank you for that. And, you know, thank you for all of the information and resources you shared from the Family First Credit Act, and the information about COVID and if you're affected with COVID and, you know, your employment. So we really appreciate the information. We look forward to receiving the resource guide. And our next program is actually, we have a program this Saturday. It's called Let's Spring Ahead and Create Our Best Lives, focusing on some barriers to lead to breakthroughs. So if you're having some financial barriers that you need a breakthrough, join the Bergen Passaic chapter this coming Saturday, May 1st. You can check out our website or on Instagram or Facebook. Thank you for joining us this evening. And I'll turn it over to my sister president in Delaware.
All righty. Thank you so much. Thank you all for joining us tonight. Thank you so much, Lynette. You always give us a lot to think about, a lot to plan, a lot to do. The list is long, but you know what? We're at it. We're ready to get at it. So thank you so much for that. I hope that everyone enjoyed all of the information. I mean, these nuggets, they're worth millions of dollars. So definitely take them and use them and apply them. The resource guide is going to be phenomenal because, you know, sometimes we can't remember the things that we learn on the night that we learned, and then the next morning it's like, what did we learn again? So the resource guide is going to be an excellent tool for you to use and to implement change. Thank you again for joining us. I thank you again to my coalition sister presidents for thinking it not robbery to partner with us and bring Lynette in. You just can't go wrong with the Money Coach. So thank you all so much for joining us again, and have an fabulous night.